Hey guys, the focus today is on crude oil prices. I am Manisha Gupta, and while all the markets have reacted to various data, statements from the US Fed and events, etc., crude oil prices have gradually only continued in one side, and that's north. We have seen very strong gains into prices. This is going to be a fifth straight week of gains for crude prices. It's trading at a 3-year highs, and we have seen 51% of gains for the US crude prices, 49% of a jump for the Brent crude prices also, and the markets do believe that it still has further room on the higher side from here on as well. The reasons that the crude prices still can surge is the recovery in demand. The pent-up demand is coming back as we have seen economies open up in China, in Europe and US. The Indian COVID cases also have continued to decline, and the markets believe that the demand recovery would start from here as well. The other thing is the fall in the global inventories. There is a belief that by the third and the fourth quarter of this year, we will have a considerable decline in global inventories, so much so that before this year ends, we perhaps would be hitting pre-pandemic levels as far as the inventories go. The other important thing is the global crude oil demand, which is estimated to be on the higher side, almost at 100 million barrels per day before this year ends itself. And the next year perhaps could be looking at even higher at around 101 are the estimates coming in right now. And then there are concerns about lower investments. There is this whole debate about the fossil fuels versus the renewables, and clearly with the kind of carbon emission targets that various companies and countries are putting out, the investments into fossil fuels is clearly going to suffer, and that would be supportive for prices. There also are reports on the long-term demand for crude oil as that comes. It is expected that in 2030s, you will see the global demand to peak at around 108 million barrels per day. Also, the Indian demand, which is currently at 5 million barrels per day, can jump up to 7 to 8 million barrels per day in 2030s. That is as far as the vision goes, and these are reports that have come in from Wood Mackenzie, Citi and Bank of America, who are looking at near-term and a slightly longer-term projection in sense of fossil fuels there. The most important, the plug in the whole game is really going to be the OPEC and allies. The discipline from OPEC and allies has surprised everybody. We did see OPEC, cut off supplies by nearly 7 million barrels per day from March 2022 to April 2021. Since then, until July, 2.7 million barrels per day will come back into the market. OPEC is deciding to perhaps bring yet another 500,000 barrels per day from August onwards. And as the crude prices continue to gain up, we perhaps will see more OPEC supply coming into the markets. Why the crude oil prices are where they are is what I have told you. But there are so many reports suggesting that the crude prices can go to $100 per barrel from here. Well, that is a theory that not too many right now are betting on. And there are a few reasons for that. One, OPEC itself. While OPEC has a spare capacity of 5.8 million barrels per day, so they can start coming back into the markets as they see crude prices on the higher side, also as they see supply trailing demand. So they would start doing that. Also, OPEC, for them, it's important that the demand continues to be strong. Higher crude oil prices would derail the global economy, and that is something that the oil producers would not want. They want the demand for their crude prices. They also want a fair pricing for that, and I believe that we perhaps have reached there already. The second reason is the Iran. They could start bringing back oil into the markets as well. The nuclear deal as of now seems to have stalled, but going forward, the conversation will pick up, and Iran is pushing to bring some oil back into the market. So that those barrels would also put some pressure on. The third most important point is that much of the forward months are trading in backwardation. So the crude oil prices are expensive right now, but when you look at the months of September and October, the crude oil prices at that time are cheaper. So the markets are looking at that arrangement also. Fourth more important thing is that US will never be in favor of higher crude oil prices. We already have seen consumer countries like US, India and China talk about high crude oil prices. The oil ministers have been asking oil producers to ensure that there are enough supplies, looking at the estimated demand going forward. The fifth more important point is about the investment itself. Higher the crude oil prices, you will see more focus coming in for biodiesel. There will be more noises about renewables and EVs coming into the market, and people would start investing in that. So that is another thing that the oil producers would not want. So you wouldn't see crude prices surging up to $90 and $100 kind of levels. Well, yes, nothing is ruled out, because last year we did see crude prices in the negative also. That is also something nobody really had forecasted. So yes, a spike in prices is not ruled out. But whether or not the prices will sustain there is something that the markets are definitely betting that it would not. And that's the reason you have seen all the banks continue to reiterate, revise their crude price estimates as well. The latest numbers that I have in hand right now are for 2021. So you have an ABN AMRO, Bank of America, Society General, Commerce Bank. All of them believe that $65 to $66 per barrel of an average crude prices is what we will see in this year. The most bullish of the lot are Citi and Goldman Sachs, who believe that $72 to $74 per barrel of an average is what we would see in this year. And yes, that does tell you this kind of an average, if you do the maths, does tell you that $80, $85 per barrel on the higher side is still a possibility. The third and the fourth quarter are expected to see more demand coming in. The uncertainty clearly is COVID. We are looking at various variants here. So if everything goes fine and the markets continue to open the way they are right now, we are looking at higher crude oil prices as the demand comes in. But $100 a barrel, well, not too many believe that that's going to happen, because that would really, as I said, and I'm reiterating myself, that would derail the economic recovery. It would also bring in more supplies, not just from OPEC, but the US shale as well, because they would all want to be a part of these higher prices, and they would increase supplies in the similar manner. So higher prices, yes, but three digits, maybe not.